Hello everyone, welcome back to another weekly index review, and I hope all of you are doing great. So last week we discussed that 17,600 remains a key resistance level that is stopping Nifty from going up, and right now Nifty is in a lower high lower low structure. So this week the market was relatively better than the previous few weeks. As you can see, the market rose this week as compared to the last few weeks. The market was falling with big white range candles and came very close to its 200 moving average on the daily chart, around 6,410 rupees, and currently it's approaching the key resistance level of 17,600. So much hasn't changed in case of Nifty. It still remains a key resistance level 17,600, and once the market crosses this level, specifically Nifty crosses this level, it would turn into a higher low structure, and after that it can go and retest its all-time high level. So this is the key, this remains the key level, and keep this level marked on your charts, and 16,400 remains a key support level. In case if we again face some resistance around this level of 17,600 and the market start going down, then this 16,400 level will act as a very good support, because 200 moving is also present here, and the market bounced back. Look at this long lower wick. uh, the market bounced back from this level, and since then it has been consistently rising. So 17,600 remains the key resistance for Nifty. Before taking any long big long large long positions, wait for this level, wait for the Nifty to cross this level of 17,600 before taking any large positions. So now let's come back to the Bank Nifty. Bank Nifty also showed some recovery, made of low of 34,000 rupees, and now right now they gave a weekly close, not a very strong close, but a close above the 200 moving average on the daily charts, which it went below with the gap. That was not a good sign. But on the very low, on the low time frame, if you go down to hourly time frame, as you can see, the structure has a Bank Nifty has started forming higher high higher low on a very small time frame, that is hourly time frame. And on the daily, 37,580 still remains a key resistance that needs to be crossed before it can give any significant move and try testing its all-time high level of around 14,825. So right now it's hovering around its 200 moving average. That is good for value picks, like if you like some names fundamentally, and if you like to trade reversals, then it is a very good point, as the index also has Bank Nifty index also has crossed the 200 moving average, but still 37,580 remains a key resistance level that needs to be crossed before taking any big large long positions in Bank Nifty. So for now, stay cautious, and 34,000 remains a key support level that will protect from any further fall. And if in case it goes down from this level, then the next level would be around 31,000. So as of now, this is acting as a good support. 34,000 and 37,580 rupees remains a key resistance level. So now let's take a look at the Nifty IT, that is in much better position than the Nifty and other indices. Last week we discussed that before making any new high, it has to cross its previous all-time high around 37,823, that it crossed comfortably, and now it is heading higher. So it can easily go to around 40 to 42,000, given this formed parallel, uh, what do we call it, declining parallel channel pattern, that it gave a breakout from a few weeks back, and since then it has been consistently rising, and now it's at the all-time high level. So if you want to trade look for trades in IT sector because it is the strongest one right now. Now let's take a look at the Nifty FMCG index. So we discussed that last week we marked these levels, these two key levels, resistance at 38,450 and the support at 35,650. So FMCG index also showed some recovery after making a low long wick. That is a good sign of reversal, and after that follow up move for a few days and a big candle uh, on Friday, and currently it is above the two it came back above the 200 moving average, but still 38 still it's in the uh, structure of lower high lower low, as you can see, and 38,450 still remains a key resistance level that needs to be crossed before the structure can change to higher high and higher low. So now let's take a look at auto index also reversed from it went below its 200 moving average, but a long wick on the low side indicating a reversal, uh, and after that a follow up move of around 800 to 900 points follow up move. That is a very good sign. uh, I will look for trades in this auto sector once it crosses this level of resistance of 11,212. It is very close to its all-time high level, that is around 12,108 rupees. And on the weekly, as you can see, it's still in the structure of higher high, higher low. And once it crosses this level 11,200, then on the daily chart also, it will start forming a structure of higher high, higher low. As of now, it's forming lower high and lower low. And since the reversal, since this point, it reversed at this point, making the low of 10,200. Now it's approaching its resistance level 11,200. That remains a key resistance that needs to be taken out before the structure can turn bullish. Oh, next, if we take a look at the Nifty Mid Cap index, so last week we discussed that uh, it is also in a lower high, lower low structure, but last week it also gave a nice move, a good reversal, long wick candle on the low side and a follow-up move for a few days, and the key resistance remains at 8,735 and support remains at 7,815. That is very close to its 200 moving average and will act as a strong support in case the market reverses from this point, or maybe even this point if it decides to reverse and for the structure to change to lower high lower low and for short at its all-time high level. First this resistance level of 8,735 needs to be taken out. So now let's take a look at other indices. Another strong index right now is the pharma index or the pharma sector. uh, it is the only sector other than the IT sector that crossed the resistance level and heading towards the higher levels. So we discussed last week that 14,000 remains a key resistance level for Nifty Pharma and 13,000 remains a key support level. So as you can see, it gave a very strong move on the upside and crossed the resistance of 14,000 with a big wide range bullish candle. That is a very good sign, and right now it's in a very positive structure. So if you want to trade, you can look to trade in this sector, the pharma sector. That is the stronger other than the Nifty IT. Nifty Pharma is the other strong sector, and Nifty also auto is also showing some recovery. Bank Nifty is still weak and Nifty still needs to cross 17,600. So IT and pharma are the only two strongest sectors that are also uh, not prone to COVID. So right now, if you want to trade, look for trade in this sector because it is giving a strong move. It crosses resistance, and in case it consolidates, it will take support at 14,000, and then it can head higher to its all-time high level of 14,937. And if we take a look at the Nifty Metal index, as you can see, uh, it has been flat from many months. It gave a very strong move, as you can see here. It gave a very strong move, and since then it has been in a range, but it is not falling now, it's just consolidating in a range. That is also a good sign. And if it in case it crosses if it in case it crosses this level of 5931, then we can expect some good move in the metal stocks. But as of now, it is not doing anything. It's just consolidating in a range, and this level of 5100 to 5130, this range is acting as a pretty good support, and the 200 moving average is also approaching it. And if in case it crosses this level of 5930, then we can expect some good move in the metal sector, and short at its all-time high level of 6311. So as of now, just observing the metal stocks. uh, right now it's just consolidating in a range. Wait for the breakout on either side, or it can go up and then test its all-time high level and make a new high, or it can break this strong support level and go further down. So right now, just wait and watch. So that was it for today, and I forgot the disclaimer. Standard disclaimer: I'm not a SEBI registered analyst, and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So this was it for today, and mark these levels and watch for these levels for next few weeks. Next Sunday we'll again discuss the market action in our another weekly index review. And in case if you learned something and you enjoyed the video, please consider hitting the like button, and don't forget to subscribe and share the channel. And I will post my Twitter account link in the description. There you can check out my Twitter account also, and don't forget to share and subscribe. Goodbye.